Hey, good morning, everybody. Dan Rawitz. This is Wednesday, just before 9 a.m. Pacific. Yesterday, I posted 3 different videos, and I think video number 2, I took profit on 3 trades, and I told you I was watching Grub, which is Grubhub, and let's see here, where'd we go? So I'm going to close this position out, and the reason is because it's up 96%. This is a position we bought at 64 cents, and sorry, again, I keep doing that to you. We sold this for 64 cents. So we sold the contract. We got $638. When we sold the contract, the prices stayed well above the $90 strike price that I chose. In fact, I'll show you just how safe this position's been. And now I can buy it back for 2 cents. So that's a 93% profit. One of the reasons it's done so well today, up $375 just today, is because I bought this with an expiration of July 27th. So what that means is on Friday, the guy that bought this option from me loses his money. It expires worthless. So he loses 638. I win. Sorry, whoever you are. And I took this position out on Monday. So this is, an ideal situation is when you can sell a put contract, have a lot of margin above it to where you know the stock is staying well above it, and have a short expiration date. That's kind of the win-win-win. So let's close this out real quick. Okay, so here's the actual security, which was a Grub put option with a $90 strike price expiring on 7/27. I have 10 of them. So the action I'm going to take, since I already sold them to open the trade, I'm going to buy them to close the trade. Pretty simple. We don't have to wait till these expire. I don't like to risk having them expire. And let's see here. Sometimes I do, but and this one probably would have been fine, but come on, 96% of our money's already off the table. I'm going to do interesting. That's okay. I'm going to do a market order just for education purposes. I don't like that the bid is 0 and the ask is 5 cents. That's a 5-cent spread, so we don't know where we'll get filled. If I were training right now, I would probably do a market order and I'd put it in about 2 cents. But the difference between 2 and 4 cents in this case is it's not that much money. So that's it. We'll review this order. And we will... Oh, what happened here? So once again, I did the same problem. I have a stop loss in this order, so it's not going to let me close out until I close out the other order. So let's just go in and do that real fast. $90. That's what I sold. 10 of these, and now I'm going to buy them back. All 10 of them. I'm going to just make it a market order because it's quicker. You don't have to wonder. Yeah, okay. Now the next thing I wanted to show you real quick is yesterday we talked a lot about a stock that I was considering taking a position in, and I said before I did I wanted to kind of see what the activity was this morning. So what we're going to do here is we're going to pull up the chart, and that was John Deere we looked at, and just see what John Deere is doing today. Okay, and if you've been watching me for a while, I'm a candlestick guy. And so the stock has rebounded a little bit from yesterday. And if you recall, the bet I want to make on this stock is I'm going to go all the way down to $125 and give this stock about $10 room to fall, because I do believe it's on its way up. But first we want to look at a couple of indicators real quick. Let's start with the stochastic. I have a very hard time saying that word. I like to look at the fast and the slow. And again, what the stochastic is going to tell us is whether we're overbought or oversold, or neither. Okay, so as I suspected yesterday, I thought that the stock was looking overbought because it had a good day. And now we're in the oversold category. This is where you want to be. We have a stock with good volatility. In fact, at 20, down here is considered very oversold. And you can see it's really turned down, and the orange line is turning up. So I think this is a very good position to take. So what we're going to do is we're going to go in and we're going to price out some options real quick and see what we can do. Okay, so we'll pull up DE, Deere and Company, and again, just as a reminder, these are all things that I can sell, and I want to sell at least down, I probably want to go into August 10th, and I'll look at August 3rd as well, and I want to sell down around 125-ish. So we can pull this up and see what it looks like. Actually, I'm going to open up this chain. That's better. Now we can see what every price is. Okay, so we know for, and I want to show all strike prices. I'll show 16. Okay, so again, each of these prices is ones that I can pick that I don't want the stock to go below. Sorry guys, let's get them all open. There we go. Okay, so if we went down to, we're not going to trade one that's going to close out on Friday, although those are tempting sometimes. Here's one that's closing next week, August 3rd. And so let's see what happens if we try to get enough protection at around 125. So this will pay around 12 cents, which if you bought one contract, that's $12, 10 contracts, $120. And that's just not enough to mess around with. But I don't want to go higher in price just because, although actually now that I'm thinking about it, 130 was the price that we wanted to be if we looked at where the support and resistance was. So so we could go 130 here and get somewhere between 47 and 54 cents. So one contract would be $54 and 10 contracts would be $540. It'll just depend on your risk tolerance. And then we can go down here and look at the follow. Was I still in August? No. Okay. Then we can look at August 10th, which is 16 days away, just going one more week out. And we can look at 125, and that starts getting better. We can get around 35 cents, or we can go up to 130 and we can get 85 cents. So I'm going to do a little more analysis. I'm going to close out this video, and I'll get back to you guys. But most likely I will go into this August 10th position somewhere between 125 and 130, and I will sell 10 contracts. You might sell 2 or 3. We'll be going through risk tolerance soon, and for that I will get paid somewhere between $350 and $800 depending on the risk that I choose. But there's a couple more indicators I want to look at before I do that, and this video is getting long. So I'll be back soon. Thanks. Bye.